Wholetailing is a combination of wholesale and retail, kind of right in the middle. So we'll close on the property and then we'll fix up the property to hit a specific price point. So not necessarily a full blown out flip where we're trying to just, compete with everything that's at the top of the market, but we're kind of scaling back from that and scale back ideally like pretty far.
First, I want to clarify what wholetailing is, because some people might get confused with wholesaling and or not sure what it is. I know I wasn't sure until we started talking before the conversation. So, what is that? And then, what's the number one secret to being successful in that field?
Yeah, so everyone knows it's kind of a complicated structure, right? Everyone knows wholesaling, relatively easy. Whatever market you're in is, you buy something for 75% minus repairs, minus whatever, and that's what you're able to make when you wholesale it to someone else. Maybe your market's 80% at the peak of the market, maybe a year ago, you're even at 82% minus repairs, something like that. And then flipping, I think is pretty easy. That's where you put something on the retail end market, kind of shooting for the top of the market. And we have 6 flips going right now, so we still do quite a big volume of those. But for like cash conversion cycle, for turnover ratio, for unknown unknowns where you bump into stuff that you just don't know what you're going to be bumping into, it tends to be a fairly risky exit strategy for us. And it's difficult to have a secondary exit strategy from an entire flip. So we like doing something right in the middle, which is wholetailing, which is kind of like it's similar to novations, really, which is also kind of big in the marketplace. We do a handful of those. But wholetailing is a combination of wholesale and retail, kind of right in the middle. So we'll close on the property and then we'll fix up the property to hit a specific price point. So not necessarily a full blown out flip where we're trying to just, compete with everything that's at the top of the market, but we're kind of scaling back from that and scale back ideally like pretty far. The keys to success, well, we can go into like how to make that successful, but that's like the nutshell of how you do it is close on it. So you have the transactional risk, but now you have control of the property as opposed to wholesaling. There's a lot of issues with it becomes more difficult to maximize your profit if you can't close on the deal. And then we try to decrease our actual like product based risk by not doing massive blown out renovations on the property, but really trying to identify like a price point where this property, if we do like these repairs, we'll hit this price point on the back end. And it's a good strategy for the right property and for the right buyer profile.
Okay, so I think I'm getting it. It's basically not just putting every investment into a box, and it's looking at it. You kind of mentioned in a little bit of the intro, like what's the highest and best, not just the highest and best use for the profit, but what's the highest and best use as far as its efficiency, right? So that doesn't mean we're gonna do a full on renovation on every single thing. It's more like, okay, given where we're at, how quickly can we turn this property? You mentioned the cash conversion cycle, so perhaps that's that ratio, right? So understanding, how much to put into each deal and the time it's going to take, and maximizing the profit. Is that a fair summary, TJ?
Yeah, and obviously that's always a moving target. There's always a lot of kind of subjectivity to it, but it definitely summarizes it in a perfect world for sure.
Excellent. So, what's the number two secret to, or I guess now the number one secret to making that happen? Since we just kind of defined what it is, um, what besides, I guess maybe volume and just doing the sheer numbers that you guys are doing, what would be the number one secret to making this thing really work?
Yeah, 2 years ago I would have said this is definitely the secret for wholetailing. I think it might even be in this market. The secret to actually like maximizing your money in any kind of deal flow is identify at any point of the deal process, at any point of whatever the deal is, identify the target buyer avatar for the property based on the submarket, based on the condition of the property, based on the condition that I can get to the property to with minimal effort, and then identify what is the likely buyer that's going to buy that property. And again, for wholetailing, that makes a lot of sense. And we can break it down. We've kind of identified probably 4 to 4.5 different buyer avatars for the wholetail model. And then we can extrapolate actually and apply that to other like exit strategies as well. Exit strategies like flipping, exit strategies like novations, exit strategies like we do a ton of seller finance where we are the bank. I think we've done 35 or more deals this year where we've actually sold a property where we become the lender. But the best way to do that is by understanding the submarket and the buyer avatar that's likely to buy the subject property on once it's on the open market or on the well even closed market. We don't put everything on the open like MLS market.